So it was really good. We saw a rebound. We dipped into 56K. We rebounded back up into the 60K, stayed in there for, let's measure this. From here to here, we stayed in there for 11 days. So after that rejection of 60K, we stayed in the 60 to 65 for 11 days. Consolidation, nothing to do, nothing to trade until yesterday. Yesterday, we got that bullish engulfing into and above 65K. So yeah, you can see the same thing happening in S&P and BTC. And right now we are above the 50 EMA. So yeah, we want to stay up there. That's what we want to see. Now, something else super interesting to note is this is an election year. And typically in election years, we see a strong stock market. It goes hand in hand. Hey, you want to be elected? You want to win the elections and become president? Then you got to make the people feel good. Americans need to feel hopeful about their future. They need to think, oh, times are good, everything's sweet. They need to think the economy is strong and healthy. And sure, then they'll vote you in. So in election year, historically, stocks start climbing up in the month of June. Now, why does that matter to us? Because that analysis goes in line with us finding a bottom support in stocks and crypto for the month of May. It doesn't mean it's guaranteed to happen. Doesn't mean this was the bottom. But, again, if we're going based off past election years, then that's the trend that we have seen being repeated over and over again. So I have this up. So this is historical election year seasonality. It's the S&P returns in election years since 1950. So you can see all other years since 1950 is the lighter blue line, and then presidential election years since 1950 in the darker blue line. And they're just averaging the election years out over this time frame. So like 70 years, 74 years. So here's what we see. In Q1, typically sideways price action. So look at that dark blue line from here to here, or same thing. We start and end at the same price level from here to here. Bit more upside, and then we're back. So this is level from day 1 to day 100 is pretty much the same price. Then, the bottom support is found in May around the 150-day mark. So on the bottom axis, 144, 155. Smack in the middle, we got this low. And this is May. And then after May, you can see we head upwards and to the right, which is really cool. And actually, you do see a bit of dip here. This is at what? Between 210 and 221. Let's call that the 215 day mark. So 215 days takes us to the beginning of August. And honestly, this is pretty much what we saw in 2020, the last presidential election year, the last start of the previous bull run. So let me zoom back to 2021 or 2020, I should say. So we got this crash at the pandemic lows. Everyone was freaking out. So BTC crashed into the 3,000 range, 4,000s. And then we pretty much found support here. When everyone thought it was going to keep going lower and lower, we actually found a bottom support between May and July. So between here, this section and this section, you can see how it's just consolidation, just so boring. Nothing to do, nothing to trade. Low, bounce up a little, and then between May and July, we did freaking nothing. This little box here I'm drawing with my mouse. And then it popped up a bit. came back down to almost that same level, but it was a higher high. And this was like beginning of September. So third day of September? Yeah, third day of September, we kind of make that new low before we just fly. We just go to the moon from here. Then we just took off, and the rest is history. You all remember how that played out. So again, zooming out and showing you the same thing, pandemic lows in March 2020. Moved up a bit, consolidated for a long time. Consolidated between May and mid-July, popped up a bit, came back down September, consolidated until October, and then we flew. So if you were in the market for the last bull run, if you were around last time, you probably remember how dead quiet it was between March and October. I remember because this is when I launched my course and the market was super, super quiet. That's how I remember. March and October, no one wanted it. Blood on the streets, death of crypto. Everyone's sick and dying. Oh my God, hospitalizations and reported death numbers every day. And it kept popping up on my phone as like a Google News notification. And it was so useless. I hated it. I tried to turn it off, but it kept telling me, this many hospitalized today, this many died today. Like, I don't care, please. The world was fear-mongering central in this zone when we were here. So, March to October, super quiet. No one was around. No one was paying attention. But if we learn anything from past mistakes, if we learn anything from history, then this is the time to pay attention. This is the time to get prepared and get positioned for the eventual real show. Does that make sense? Quiet times are for playing offense, like my friend said. The quiet times is when you look to get positioned. You look to get your capital ready and deployed. So, bringing us back to current day, if we do see a low in May, and maybe this was it, maybe this was the May low, we don't know yet because we haven't cleared this indecisive range we've been in for so long. But if we do find our low in May, whether that's this or another low, then we will climb to new time highs in probably 3 to 4 months. Which might mean we get a new all-time high above this level in Q3. And Q3 starts in July. Because at this point, it seems unlikely that BTC will reach a new all-time high in the first half of 2024. And I couldn't believe it when I was like looking at the charts. I'm like, no, like we have to make a new high in the first half of 2024. Until I looked down on my taskbar and I'm like, oh my God, we're mid-May. We only have a month and a half until the first half of the year is gone. So, yeah. With that being said, when in doubt, I just want you to remember the 80-20 rule. You've probably heard about the 80-20 rule in life and other things before, but the 80-20 rule can be applied across all facets of life. So with trading, I say trading is actually only 20% technicals and strategy, and 80% of it is mindset. 80% of the time is spent waiting, and 20% of the time is spent actually trading, executing, and entering positions. And the same thing when it comes to market prices. The market does nothing for 80% of the time and moves for 20% of the time. So look at this. You just moves 20% of the time, does nothing for 80% of the time. So I know when you're in the market, it feels like something is happening all the time. Like, oh my God, big candle, small candle, green, red. It feels like there's always something happening and going on. But when you zoom in to the current time, there's still no clear trend. The impulses are shorter than the consolidations. Look, the impulse, if we count this as an impulse, that is much shorter than this correction phase. If we expect it to go impulse, correction, impulse, then this is spent 20% of the time impulsing and 80% of the time correcting before the next impulsive phase. And so this is why you need to work on your patience and work on your psychology. Right now on the daily, the trend is down because we've got lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. But on the weekly, it looks like a giant impulse and correction. So again, long-term and macro view, I'm bullish. But short-term, unless you can identify a trend, personally, I would stay out of this particular chart. If you think it's going to go off from here, then you can get your positions prepared. Look for break and retest, get your limit stop buy orders prepared. But if you don't see any levels, if you don't see a trend, then that's not the time to be deploying capital.